to talk about is why I think that what the market is telling us is that if you insist on getting into real estate, there is a safer way to do it, and there's a less safe way to do it. And let me start actually right there. Who here owns real estate, owns rental property? Wow. Who here doesn't? So the majority does. So the majority, tell the minority, how much fun is it? That's a great punchline. I've been doing this for 13 years. I got so many stories you wouldn't believe it. My latest story that I just want to tell is my murderer tenant who did 13 years for first-degree murder. His girlfriend is the one in anger management classes on Tuesday night. And I collect the rent. I go there and I, cash, and they're nice people. But it's, you know what? I like to start, when people come to me and say, hey, I'd like to buy an investment property, first thing I say is, do you really want to? It's kind of a life thing. I think it's a phenomenal thing to do if you just have what it takes, the financial maturity, the emotional maturity. It's really pretty tough. And look around and talk to the people who've done this. I mean, who here doesn't think it's actually hard, especially in your first years? Okay, Patrick Schoman, who's just a little bit self-centered, don't we think so? So Patrick Schoman is one of our vendors. We thank you very much, and he's a fantastic property manager. He actually revels in this discussion because I talk about how horrible it is, and he thinks I'm pretty stupid for actually not handing my properties over to him. He's probably right, but there is a solution. You hand them over to Patrick or another very, very good property manager. So I'd like to start by saying not everybody should be investing in real estate, but if you insist on investing in real estate, you can do relatively low risk or all the way up to very high risk, probably really stupid things to do. And I've been doing this for 13 years, so I've done it all. If you believe me, I think you should stay away from the high risk stuff, personally. I was listening to Tom Martino yesterday, just by chance. He said something that I won't forget. And he's a very experienced real estate investor. And who was the person I was speaking to who was just telling me that, he's got some foreclosures going on. He's very honest about what's going on. Hey, these things happen, believe me. And what he said really struck me. He said something like, if you want to make a killing in real estate, you're going to get killed. And I was like, I got to remember that for tomorrow. That's really good. I'm going to use that. You know what? Don't go to a weekend seminar. Don't buy a Kiyosaki book and think you got it all. It's very, very tough and dangerous. And there are right ways to do it and wrong ways to do it. So what I'm going to talk about is what I think is maybe a right way to do it. And I think specifically that today's market is inviting us to do this. I think that what is going on in our market today suggests to us that if you're going to be in real estate, you should be buying and holding small properties, taking little steps and building wealth over time in real estate. Okay? Fair enough? So let's talk about why. Let's get into some of the trends. And I know it's going to be hard to see here. That's why I printed these out for you. So what's going on? First one I want to show you is the number of showings plummeted after the tax break ended. So what we had here was, this is March and April number of showings per listing. In March and April, skyrocketed. We had under 250,000, 10.7 showings per listing, meaning every listing had a showing every 3 days. That was per month, got it? Then you compare that to what happened right after the tax break. It went down by more than half. So who do we have? We've got some real estate agents here. Tough market, right? By and large, especially if you're on the listing side, the numbers are really looking kind of scary, and I have no reason to believe they're going to get better. Now, I own a real estate company. It's kind of bad on that side, but I think there's an opportunity, because whenever somebody loses, somebody wins. Please remember that. So when the paper says things are bad, they are bad for whoever's reading the paper, who they think their clientele is, but it's also good, and that's what I'm going to be talking about. So what happened here is in July and September, you got to 6.2. The argument I'm going to make is there's a lot of reasons to believe that it's a buyer's market right now. And I'm not sure I have to convince you. Who here doesn't think it's a buyer's market? A couple hundred people think it's a buyer's market. It really is a buyer's market. Yes, Paul?
Right, it depends on the price range, though.
It does. It is way more of a buyer's market on the high end. Would you agree?
Right.
But we're finding right now, even on the low end, it's still a buyer's market by and large, as opposed to, say, a year ago. A year ago, it became a seller's market because there were no REOs left, no bank-owned properties, and the short sales were just getting ramped up, and they're in a 6 to 9 month deal anyway. So by and large, we're seeing even at the low end. Now, you're right. At the very low end, you're at 4 and 3.3. Actually, you're not too much right here. There's not much going on. Things have certainly slowed down. So argument one is, if you're going to be a buyer, buy in a buyer's market, and I would suggest that it is. This right here is the same data, it's just so dramatic. I like to show it in a different way. The punchline is, those were the number of showings pre-tax credit, and that was the next month. It's really hard to predict the future, but this is something we could have predicted. And if you had been working with me or some other agents, they probably would have told you, don't be buying in February or March of last year. Start buying in the spring and the summer. And that's what we did. Because we knew this was going to happen. You pay people $8,000 to buy a house, they buy houses. They inflated the prices, and then the next day, the market crashed. Did y'all see that? Anybody not see that? That's what I saw. That's what our 270 agents saw. And it's been tough, but we can take advantage of that. The number of sold homes has plummeted. So one of the things you can do to predict at least a few months in the future is you can make a correlation between the number of homes visited, showings, and the number of homes sold. We actually sort of stumbled on this, and we went back a few years just to kind of play around and see if it made sense. It makes great sense. You can't sell a home that isn't being sold. So what happened is, we're looking at the number of homes sold from 05 to 10, and we peaked right here around June of 05, I think that was, when we had 4,500 homes sold, and it's been going down every year. Different parts of the market, different neighborhoods, like Paul said, act differently, no question about it. The low end was already going down at that point. The high end was still going up to the end of 07. But by and large, the number of homes sold has been going down ever since. So this right here is 09. And now let's get to the punchline, which is this year. What you see, of course, is a massive number of homes being sold right here, because we saw everybody was looking at homes the previous couple of months. And then immediate upon the termination of the tax credit, look at that. It's a perfect curve downward. This is when one should be buying, in my estimation. Now, what are we buying? Fix and flips? No, because I don't think the market's going to change in 60 to 90 days. That's my argument, is that you're going to buy in this market, you're going to sell in this market. The idea of you buying at the bottom and suddenly the market getting better in 2 or 3 months is just fantasy to me. You've got to provide a huge amount of value, which there are people in this room who can do that. And I have clients doing that, but they're very, very good and few and far between. For the rest of us, it seems to me that if the market is going down, the market's going to stay down for a little while. Maybe not a bad time to try to drive a really hard bargain and have a long-term business plan. That's what we're talking about. So this is where we were in July. This is where we were in August. If any of you saw the presentation about a month ago, you would have seen that we were actually estimating things were even off. Just our wild-ass guess was that things might go back up. Well, it didn't. September's even lower. So if I remember the numbers right, in 07, there were about 4,400 properties under contract in September of 07, about 4,300 the next year, about 4,350 last year, 2,930 properties under contract September of this year. It's really dramatic. So you know this, you know it intuitively. What you're reading in the papers is actually true. The market has seized up. Don't even ask me about what's going to happen with the foreclosure, thing going on with Bank of America. It's going to seize it up more. I kind of don't like to live day to day, but clearly, who here is at the auctions? Who here goes to the auctions? Aaron, are you here? Apparently, the number of properties being sold, I don't do auctions, but the number of properties has plummeted in the last week. It's already being affected, is that right? That's what I'm being told. Okay? So, not a bad time. So what's happening is, we don't know where this is going to go, but we just changed our mind and said, okay, maybe it's not coming back. Maybe it's going to continue to go down. But look at that versus every year previous. Okay? Buyer's market. Fair enough?